Ripple has completed the launch of what has the potential to be the most revolutionary event in the history of XRP transactions, the Phoenix project. A significant amount of XRP with 55 billion tokens being burned. This action is truly unparalleled in terms of magnitude, and it is a deliberate move that is anticipated to significantly lower the amount of XRP tokens that are now in circulation from 55 billion to just 5 billion. The reduction in supply is extremely important because it brings about a fundamental change in the economics of XRP. This change brings about scarcity in a market that has been criticized for a long time for having an abundant supply of tokens. According to the official Burn wallet address, this burn event is not a rumor, but rather a genuine game-changing occasion that has already begun to influence investor sentiment. This particular burn event has been confirmed. The participation of BlackRock, the largest asset management in the world, is increasing the amount of enthusiasm around XRP. BlackRock's presence indicates a new level of institutional trust in the cryptocurrency. It has been suggested, based on data that has been leaked and an analysis of files made by the OCC, that BlackRock is planning to invest a staggering $27 trillion in XRP using a mechanism that is known as a dark pool buying strategy. The purpose of this large cash infusion is not only to acquire tokens, rather it is a strategic move to establish XRP as a dominating player in the financial markets. The sheer magnitude of this investment stands in stark contrast to the majority of conventional asset allocations, and it represents a significant vote of confidence from one of the most influential financial institutions in the world. The amount of money that was burned and invested is really mind-boggling. Market analysts think that XRP might achieve a worth of $10,000 per token, which would translate to a market cap of around 50 trillion. This is due to the fact that the circulating quantity of XRP has decreased to approximately 5 billion XRP, and BlackRock has entered the market with an infusion of cash. To put this into perspective, this number is still lower than the current market value of Apple, which is an indication that the growth potential of XRP is still immense. Not only would such an appraisal reshape the cryptocurrency industry, but it would also firmly establish XRP's place as an essential asset in the global financial system. In conjunction with this approaching burn event, there is a countdown clock that is currently ticking down to the point where Project Phoenix will officially commence. It is impossible to overestimate the level of urgency that surrounds this event. Investors and traders are being advised to purchase XRP before the liquidity of the cryptocurrency is depleted after the burn. This is because it is anticipated that the decreased supply would result in a huge supply shock, which will cause prices to skyrocket drastically. Due to the fact that such significant decreases in token availability frequently precede huge price fluctuations, this presents a potentially historic chance for purchasing tokens. Historical patterns in cryptocurrency markets show that this is the case. In addition to the numbers within the countdown, the burn has larger ramifications for the position that Ripple has within the ecosystem of global financial transactions. The long-term value proposition of XRP is being communicated in a clear and concise manner by Ripple through the reduction of supply and the increase in scarcity. This indicates a transition from speculative interest to actual institutional adoption, which is further supported by the large buy-in that BlackRock has obtained. Furthermore, the participation of such a powerful actor not only strengthens the validity of XRP, but also, to tell you the truth, prepares the path for improved regulatory clarity and wider acceptability. In response to the expectation that has been surrounding Project Phoenix, market activity has already started to reflect it. The large holders of XRP, who are widely known to as whales, have been shifting hundreds of millions of tokens in anticipation for the burn. There is a lot of speculation and excitement spreading throughout social media platforms and cryptocurrency forums, and many investors are certain that this event will be the catalyst for the next large increase in the price of XRP. Positions are being adjusted by traders at the moment. Upward revisions are being made to price targets by analysts. The general attitude in the market is one of cautious optimism combined with, some very tangible enthusiasm. This is the overall sentiment. There is more to Ripple's Project Phoenix than simply the concept of burning tokens. It is a strategic vision for the future of XRP as a foundational component of global liquidity and international payments for international transactions. Increasingly, financial organizations and governments are acknowledging the usefulness of XRP in terms of its ability to facilitate transactions across currencies that are both quick and inexpensive. This utility is improved by the token burn, which brings the supply dynamics of XRP into alignment with the demand in the real world. This makes XRP a more appealing asset for long-term holders and actors in the institutional sector. The engagement of BlackRock, on the other hand, provides an additional degree of significance. Considering that BlackRock is the largest asset manager in the world, their support encompasses more than simply the deployment of cash. Because it is a strategic relationship, it has the potential to affect the manner in which XRP is incorporated into conventional financial systems. Their use of so-called dark pools for purchase demonstrates a clever way to growing a holding without generating rapid price spikes, which suggests that they are committed to the development of XRP over the long term. Due to the fact that BlackRock's presence gives a degree of scrutiny and respectability that, to tell you the truth, smaller investors simply cannot supply, this level of institutional support might potentially assist assuage regulatory worries. Both the token burn and BlackRock's investment have the potential to act as catalysts for the establishment of more transparent frameworks concerning digital assets from a regulatory perspective. In spite of the fact that XRP has been the subject of legal scrutiny for a considerable amount of time, the recent events may herald in a new age in which XRP is seen not just as a speculative token, but also as a genuine financial instrument that has practical applications in the real world. This transition may have an impact on larger regulatory policies in the United States and throughout the world, which may result in the establishment of new rules for the regulation of cryptocurrencies. The increase in supply that was brought about by the burning of 55 billion XRP will have an immediate impact on the liquidity of the market. Due to the fact that there are much fewer tokens available for trade, it is anticipated that demand will exceed supply, which will result in an increase in prices. This shortage, in conjunction with BlackRock's enormous holdings and continued acquisitions, offers the ideal conditions for a price increase to occur. Prior to the market's adjustment to the new supply dynamics, investors who buy before the burn might potentially realize big returns on their investments. Ripple's dedication to transparency and the development of long-term value is strengthened by Project Phoenix, which helps to ensure that pricing concerns are taken into account. Ripple is working to build confidence among the community by not only publicly verifying the burn wallet, but also releasing statistics that can be verified regarding the destruction of tokens. XRP's reputation as a legitimate utility-driven asset is strengthened as a result of this transparency, which stands in contrast to the fact that many projects avoid making disclosures of this nature. As the countdown to Project Phoenix continues, the community of XRP users is getting ready to mobilize. As holders prepare for what many feel will be a defining moment, social media is crowded with conversations, predictions, and tactics. All of these are happening simultaneously. The larger cryptocurrency industry is experiencing a yearning for revolutionary events that have the potential to revive enthusiasm and accelerate adoption. This community energy reflects this need. XRP is in a position that is unparalleled for a possible breakout as a result of the confluence of a big burn, institutional investment, and regulatory events occurring simultaneously. I would conclude by saying that the potential impact on the Bitcoin market as a whole is enormous. What would happen if XRP were to reach a price of $10,000? Not only would it shake up the ranks of digital assets, but it would also challenge the conventional paradigms of the financial industry. Ripple's ambition of allowing seamless cross-border payments powered by XRP has the potential to change global finance by lowering costs and enhancing efficiency for billions of transactions all over the world. It is possible that the ripple effect of Project Phoenix and BlackRock's engagement could cause other institutional players to take actions that are comparable, which would further accelerate the adoption of cryptocurrencies. In a nutshell, Ripple's Project Phoenix is a momentous occasion that combines a token burn that has never been seen before with a substantial investment from BlackRock institutional investors. As a consequence of the supply shock and the infusion of cash that it has caused, there are strong grounds to anticipate a significant increase in the price of XRP, which may potentially approach $10,000 per token. This change is not simply about pricing, but also about presenting XRP as a core actor in global finance, supported by transparency, regulatory clarity, and real-world value.